Many people debate whether this capitulation was the end of the Bitcoin bull market or if it was just an exceptionally brutal markup correction. In this episode, we'll examine the very clues that may just give us the answer. As Bitcoin hit our long-anticipated target of $42,000 to $45,000, albeit it kept going down rather steeply immediately thereafter, it's now back to the drawing board to work our magic and figure out where we're at and where we're heading. This is not an easy task, but rather one that requires countless hours of tireless analysis. It's one jigsaw piece at a time and constantly circling to the very core until a full picture emerges. And this is exactly what we'll do in this episode, for we'll analyze whether this is the beginning of a markdown or if it's just a glitch in the record. And if you appreciate the hard work on this channel, then please return the favor by hitting the like and subscribe buttons, and most importantly, share this episode with others who may benefit from hearing this too. And as always, nothing in this episode, not a single word, is financial advice. These are my own thoughts and conclusions only, and I may change my mind at any time and with no notice if new data were to surface on the charts. But let's now take a look at the most important question of them all, whether this was it or whether Bitcoin has more to give. In the previous episode, we discussed the EMA 200 on the daily and how important it is. I'm not gonna lie to you, as much as Bitcoin has recovered from its midweek flash crash, this right here could just as well be a mere dead cat bounce before proceeding lower. But how then do we know whether it's a dead animal of any sort or if it's in fact a reversal? Well, the simple answer is we don't, at least not until it's too late. But with that said, there are still several incredibly valuable clues if only we know where to look for them. And luckily for you, that's exactly what we're gonna do in this episode. Now, Bitcoin breaking below its EMA 200 on the daily and having now tested it from below for the third time is no good omen. It paves the way for at least a temporary rejection. At least any such would not surprise me one bit. This EMA 200 struggle, which coincides with a short-term horizontal resistance, is also accompanied by notoriously weak RSI behaviors on the 1, 2 and 4 hour charts. On the 1 hour chart, which is the one to keep an eye on when it comes to charting for a break above the EMA 200 resistance, we can see that it gets rejected by the upper bearish blue line and has so for a week straight now. Any recovery amidst a downtrend is a bearish continuation until it isn't. This may sound obvious, and so it is, but as a downtrend typically lasts for some time, each and every recovery is just a pause for the fat bears to catch their breath. Ultimately, it will turn, but that may not occur until the 10th try or even on the 20th. In that sense, statistically speaking, we should always presume that any counter-trend move like this is just a mere continuation formation for further downside. But here's the thing, when we zoom out to the weekly chart, we can tell that the EMA 50 has acted as a superb level of support throughout each markup. For never has the price closed below it, not once. And what do we then have so far? Well, we have a wick test that did find support on it. And the reason why we look at the EMA 50 on the weekly is because it's even more reliable than the EMA 200 on the daily. For when we examine the daily chart in a discretionary fashion, we must take into consideration that Bitcoin has been moving sideways for 3 full months. Naturally, this flattens the EMA 200 on the daily as opposed to the previous markups in which no correction, price-based or time-based alike, lasted for longer than 5 to 6 weeks. This one has gone on for twice as long, and in this sense, the longer Bitcoin or any other equity too for that matter trends sideways for extended periods of time during a markup automatically increases the chances of an EMA 200 retest or of a break below it, like in this case. Simple as that. Now, to further support the thesis of a mere aggressive correction, what the previous two markup tops had in common, as in the one from 2013 and the one from 2017, is that they had a volume build-up towards an average of 90,000 bitcoins traded per week. But what do we have now? We have weak volumes that so far only reach 60% of those average volumes. For the further into a markup we go, as in the closer we get to a blow-off top, the more significant the trading volumes. Now, does this here look like an end of the cycle trading hysteria to you? Exactly, it doesn't. To get some perspective, let's move on to a crypto that has actually trended steadily throughout this markup, namely Ethereum. And the reason why Ethereum is interesting and relevant is because it hasn't been stuck in limbo like Bitcoin. Throughout the 2017 markup, the EMA 200 on the daily acted as clockwork support. Whenever it tested it, it shot the price back up like a freaking catapult. But what then happened amidst Ethereum's chain reaction dump the other day? You got it, it tested, or barely tested, the EMA 200 on the daily, and it is equally so back above its green Ichimoku Kumo. And what's even more important is that Ethereum's RSI is looking ultra healthy. Upon each markup correction so far this year, it has found RSI support either on the green neutral line or on the lower bullish red. And to make things even more interesting, upon Ethereum's previous top out, we got a textbook upper bearish blue closing from below, just 13% from the absolute all-time high. This reversed J type of movement is absolutely typical when it comes to identifying a distribution reversal, or in identifying the very top, if you will. Not only did the RSI perfectly warn us near the previous all-time high about a markdown to follow, it was even courteous enough to warn us right at the peak before the 64% capitulation. So thank you for that, RSI strategies. And for those of you who haven't seen them yet, do yourself the biggest favor and watch the RSI trilogy, for this is my magnum opus treat to you. But here's the entire point with this. Do we see any such RSI behavior now? Have we seen that reverse J at all that found its way to the upper bearish blue closing from below? And by the way, those upper bearish blue closings always come from above and always close from below when it comes to distribution reversals, as in identifying the top of the tops. So is that what we're looking at here then? No, exactly, it's not. We're looking at a perfectly healthy correctional shakeout. Ethereum looks really strong, and so does Cardano, whose movements are too similar to those of Ethereum to be worth bringing up. And equally so, if we look at Bitcoin, it too gave us a perfect upper bearish blue warning on the daily before rolling over like a dead seal. And has it done so now? No, it hasn't, not even close. And the reason why we don't count these two is because they were technically disqualified due to this mid-April RSI action. But of course, any one of you who has watched the RSI trilogy knows this already. Because of these clues, we have strong reason to believe that this markup is not by any means over. And the reason why the crypto community is confused about it is because of Bitcoin's 3 months of sideways movements that have closed in each and every moving average, which technically is unprecedented amidst any previous markup. But this is what Bitcoin does. It does anything to make our lives difficult. What it didn't count on, however, was our figuring it out. In this sense, based on what we know so far, I think we can rather safely conclude we're still in a markup. And on a final note, we have likely completed the fourth impulse wave, upon which a much pleasant and exponential fifth wave should be in store. And what further strengthens this Elliott thesis is the fact that each impulse in turn is made up from 5 impulses and ABC corrections in turn. With that said, this doesn't mean it's all up from here. We can still see corrections in the mid to late 30s in the upcoming couple of weeks. For simply put, the market doesn't just swap on a dime from having been in a panic and despair to being joyful and euphoric. But after a couple of weeks of Bitcoin licking its wounds, I think we might be in for a nice ride towards 6-figure highs. That was all for now. Thank you and goodbye.